Welcome. How we doing? Trying to do a little grind up here. How's everybody doing? Hope you all had a good day. Just a few of us in here. Man, group was quiet today. What was up with that? Ricky, how you doing? Nice to see you back. Nah, this is so hourly 20 in VWAP, and actually, thanks for reminding me. It's hourly 20 in VWAP, just colored them in between, but we're not going to use that tonight just so we can see past it a little bit easier. Thanks for reminding me. But I just asked Assassin to make it for me. And as always, that guy tends to deliver when you ask him a favor. And I've never really liked the cloud things. I mean, all they are is an EMA. So I mean, uh, I just like that hourly 20 in VWAP because I use those two things so heavily that it's nice to see, it's nice to see where they sit in relation to each other. And then since I run the same studies on all of my charts, it makes it real easy to just glance over at my other screen and see where we sit in relation to those. But no, I've never got too into the EMA things. I use EMAs much less than other people do. I frequently use EMAs more as targets as opposed to entries. So the EMA cloud has just never really, spoke to me. I guess technically the hourly 20 VWAP is pretty much an EMA cloud, but they're just two things that I put a bit more faith in than your average EMAs. Welcome everyone. We'll give a few more minutes. I saw that I forgot to tag premium on my reminder of the first one, so we'll see what attendance is like tonight. But we'll give it a few more minutes, see if a few more people are going to show up. They tend to come trickling in. The hourly 20 is insane. I mean, it's like, uh, it's just wild, like how well it just works all the time. Like when you get like movement around that thing, it often provides you really nice like break and retest entries, or even just, lets you help build that bias pretty good, man. It's a solid one. It just offers really great risk reward trades. That's why I really like it. It's a safe thing to use. Someone's clicking the buy button on the futures, huh? Oh, market just opened. Again, maybe. Man, nice little 20-point candle there on NQ. Welcome everybody. How we all doing tonight? Hope everybody had a good day. As I said, it was real quiet in the group today. 50 pack, how we doing? Just hanging out, man. ran errands all afternoon, got home just here a little bit ago, and jumping on for lecture time now. I got to call it pretty promptly at 6 tonight. I'm going to get dinner with the lady after this. It's 9 for you East Coast people. Eh, I'm just not a believer in I'm not a believer in long term on these minor names myself. I will say I've swung something Mara every single day this week long, and I stuck with that. So I got a little 18 call runner in the money that I'm swinging into tomorrow. So uh going to hope we get a nice little push up. I want to see 19. Give us 19 soon. I'd love just I'm hoping, can't wait to say this so that all of you can tell me I'm wrong if I'm wrong. Um uh I'm hoping that we get a nice little rally in the markets tomorrow, especially on some of those like, you know, some of the I'm hoping for rally on, some of those, crypto names, things like that. Few of those tech names that were just a bit slower today. And uh, then I'm hoping for a little downside in the oil sector. So we'll see. I mean, that kind of might make SPY a bit of a pain. But then tomorrow we also have options expiration. Those monthly expirations are tomorrow. And so, you know, could be choppy, could be volatile. We'll see. Regardless, we got the inauguration next Monday, so I would expect some volatility. Not going to say it's going to be a big up or down move, but maybe some nice intraday downs and ups sort of thing. But we'll see. Ooh, Ben, are you who DM'd me about volume? I hadn't got back to you yet. I read that here about 3 minutes ago when I sat down. So so yeah, coming back to price action that I was supposed to do right away. We never did do that second class on it. I gotta be honest. When you mentioned that I had said we would do another one right away, I fully remember saying that in the lecture, and then I apparently forgot about that. So tonight is, you could call it part two. And then your second part of that question is you've asked about volume. And I'm going to kind of respond to your question because I think it's awesome that you brought it up and you noticed that. And so we're going to talk volume a little bit tonight. Things that I like to look for more in relation to price action. And then you talked about Toasty's volume lecture. So the volume that he is discussing, that is on, he's not a scalper. He's not really even a day trader. I mean, if his trade works out in a day, obviously he's not going to, do something dumb with it and let it go red. But the volume analysis that he talks about is much longer time frame. When I'm saying it's hard to teach about volume, I'm more discussing intraday things, whether it's scalps or day trades, where, you watch that volume coming as it's coming and, make sure it's staying in your favor, make sure that you're trading with the volume, or if you are trading against the volume, you have a good reason for it. And so that type of thing is very hard to teach without these numbers moving. These are the volume studies I use, obviously. And without those movings, it moving, it can be hard to teach about it. However, with price action, I'm going to talk about some of those things that I just discussed. That volume matters, and volume is a part of price action. While it's not necessarily on the charts, your actual candle charts right there, it's something that I use every day, and I think should always be taken into consideration. Anytime that you are trading, just because you know we as retail traders mean absolutely nothing to the market. We aren't moving the market. We are not the volume in the market. There is no big money person trying to track down retail trader flow, but there's plenty of retail traders trying to find that good flow for the big money, you know? And so, we want to be aware of what that big money is doing. And so we'll get into this in a little bit. You know, I am going to talk a little bit about volume. Probably not going to be as detailed as you wanted, but I don't know if you are in pro. Remind me someday during market hours and let's look at volume and I'll happily talk about, you know, what I'm watching as it's going on. But okay, with that, let's see if we got anything else in here. Ooh, Christopher, bummer. I apologize. That's always rough, but that's that hard lesson of always have a protective stop on. Oh, we got Mike in the house. Mike, how we doing? Already asking questions. I saw your DM too. You know, I would say nice job, but also you always got to be careful. You trying to use that technical stuff for uh, you know, news. You know, anytime there's news coming, you always want to be at least a little bit cautious of trying to use those technicals for what you're analyzing in the market. Okay, but with that, welcome everybody. Nice little crowd in here now. Sorry getting started just a second late. But thank you for being here, Dirty River. Good to have you all. Tonight we are talking price action. Very likely my favorite thing to talk about in the market. Oh no, Lambos, we were long at the bottom and then it just wasn't the bottom. If anybody, here's here was where I entered Apple long today. You can imagine how that one. Yeah. This is a nice bottom until it was $5 lower. Okay, so with that price action, happy to have you all here. You know, yeah, Apple, those are at zero. So happy to have you all here. Price action, my favorite thing to talk about in the market. I think there's a lot of confusion about what they're, you know, what is price action and what do people mean when they say price action. And for whatever reason in the last, you know, couple of months there's more and more people throwing that term around. I think it's relatively unfortunate because a lot of times I'll listen to like what these people are saying and they're missing the whole idea of price action, you know. And so all price action is, it's a very, you know, the overall idea of it is trading what is on the chart. And so why does that matter to us as traders? Because I say it all the time, people say it all the time, you know, it's fine to have a bias on the market, but you need to admit when you're wrong and be able to switch that bias and trade what the chart is actually telling you to trade. You know, there's times, you know, where, and sometimes it works, sometimes it doesn't. I'll just use my trade as an example because I'm completely blown out. You know, I got no shot at making money on this trade. I was looking at Apple, you know, big selling on news today. And I made the choice to, you know, attempt the dip buy right around here at this, you know, opening range. I said, if Apple's going to get to bouncing, it's going to get to bouncing here, you know. Look at this chart. And obviously it says Apple's going down, you know, I mean, like, you know, the Apple's getting crushed. So you're taking a risk doing that, but the chart is telling you, hey, you can give it a try. So that's what price action is. All price action is looking at what the chart actually tells you to do, you know? In simplest terms, I mean, stocks going up and to the right, be long. Stocks going down and to the right, be short, you know? I mean, that is like the most basic overview of what price action tells us. However, you need to be a little bit more, you know, technical than that when you're discussing price action. And so today, you know, this is obviously going to be a much more, you know, technical lecture. We're going to be talking about little nuances in the chart, things that you might notice, things that you'll take note of. And really, you know, I'm just going to tell you some things that I look for in relation to price action. And so, you know, just to get rolling, again, thanks everybody for being here. Why should we study price action? Why does it matter to us and how can it help us? And one of the main things that it does is it helps you understand the market. And as I mentioned earlier, it removes your bias. It's fine. I came into this morning personally looking for a bounce, you know? So I was looking to buy dips down here. I think we might have scalped one or something down here in the voice chat this morning. There's a lot going on in the voice chat today, so we definitely took a few less trades than normal. But I was looking into bounces on the day because I had kind of a slightly bullish bias. I didn't expect a rally or anything, you know, big old move to the upside, but I definitely expected us to go up. However, I was wrong. And I'll happily, you know, when I'm wrong, I'll happily tell you that. And what we ended up having was basically a really, really nice range day. You know, that's all today was just a really nice range day, really big, or you know, not really big moves, but plenty plenty of movement in this to make money. You know, there was a lot of trades to be had. As I said, you know, in the other voice chat this morning, I didn't go into premium today, so I don't know how they were doing over there. I gotta believe with no real breakouts on the ETFs, typically, you know, both Flips and Nando, they love to trade breakouts. So today probably wasn't their favorite day in the market, you know. But price action told me relatively quickly in the day to be looking to buy dips and short rips. And so that's one of the main things that price action is going to tell us. Where should our bias be? Should our bias change? How can we trade the market? And then it can help us to understand repeating patterns. And when I say repeating patterns, I'm not talking about, you know, bull flags or bear flags or, you know, cup and handles or things like that. I'm talking about, you know, actual things on the chart that work over and over again. Some things that you can look for. You know, one of them that I'll talk about a little bit is a three push wedge. It's something I like, super easy to identify, super easy to trade, often very low risk trade as well. So does a really, really great job at helping you identify these repeatable things. You know, another favorite of mine and most price action traders, double tops and double bottoms, they tend to work really, really well. Even triple tops, triple bottoms, you know, they all tend to be extremely successful patterns overall. You know, they have a very high win rate, at least for a scalp. And if you're going to catch a reversal, it is oftentimes going to be off of a double top or double bottom, is where that reversal is really going to come from. So, next thing that it tells us, and this is likely, in my opinion, the most important part of price action, and it's why I think everybody should study it more than they do. Without price action, you are unable to build a trade plan. And so obviously next week we're doing, I think next week is trade plans. It might be Q&A or trading psych, but soon we're doing trade plans in one of these lectures. And without price action, you can't build a plan. And that is where I tell people trade on the chart. You know, when you're building a trade plan, you need to identify three things. And in order of importance, in my opinion, you need to identify your entry, you need to identify where you're going to stop out, and then, least important of it all, you need to identify where you're going to take profit. We as traders, our job is to protect our capital. So, stop out and entry are the two most crucial things we can have. You know, and price action tells us, where do we enter? Where do we stop out? Where do we exit? The other thing that price action can do for us is, and this is one, you know, this is, I might be being, you know, relatively sassy, like talking about this one maybe, but one of these that we can talk about is it helps you not make just wildly outlandish claims, you know. Today, we're trading here, you know, and, you know, we're trading down here at these lows. And I had people asking me in voice chat, are we going back to 595 today? Well, first off, during market hours, we have never been to 595. And second off, when we're down here at these lows, all you got to do is look left and up and understand there is a lot of stuff between here and 595. So you don't want to be the person making those outlandish claims. You know, does every once in a while they hit and people think you're a genius? Sure, but price action will help you stay realistic. You know, when we were down here, and people were saying, you know, oh, can we buy calls? And, you know, are we going to go back to high of day? Well, when we're down here, you should be looking for EMAs. You should be looking for hourly 20s. You should be looking for VWAP, maybe trend, you know, when there's a lot of stuff in the way. Price action tells you don't be the person calling for 596, you know, because the 1 out of 10 times you're right, sure, people think you're a hero. The 9 out of 10 times you're wrong, everybody makes fun of you. So price action will help you control that. And then again, you know, one of the really, really great things about price action, and the thing that I wish more people would focus on, and you know, we all joke about it all the time. I make jokes about it, Flips makes jokes about it, you know, we all do. don't buy calls at resistance and buy puts at support. And that's price action, you know, and it goes back, double bottoms, they work really, really good. That's like, don't short lows, short highs. That's kind of one of those, price action ideas. And so with that, those are all the reasons, to me, those are the reasons we want to study it. Price action tells us what is actually happening on the chart and in the market, not in our feelings, not in our heart, not, you don't want to be the person, I'm sure when we were down here and some people were asking me, are we going back to 595? They were in some out of the money calls, really, really hoping that it was going to go back to 595 and they were going to make money, And price action will tell you when to hope and when to just cut your losses. And so, with that, obviously, some of the big picture things that price action can tell us, and the things that we look for is, are we in a range? Are we in a trend? Those are two of the, those are two of the most important things. Mike, why are you sending charts? That is ridiculous. Did you just try to draw a diamond top? That's not a diamond top. So are we in a range or are we in a trend? That is some of the most, that is the one of the simplest and one of the most crucial parts of price action. I actually saw somebody up here a second. How can you tell if it's going to be a choppy day? Today was trash. So I saw your comment. I get that. A lot of people don't like this kind of movement. And so how can we use price action? How can we use the chart to identify something like that early? And so the easiest way to do it, at least in my opinion, and you're going to be able to do this about, well, from 30 minutes into market open, you will have a rough idea of, are we in a range or are we not in a range? And so, how do I do that? The easiest way to do it, pull up an hourly chart. Then you want to look at your very first hourly candle of the day. And like I said, that's going to print well if you're on Thinkorswim. It's going to print at the whole hour. For whatever reason, Webull closes their candles on the 30-minute. That's why Webull EMAs and VWAPs and stuff are well, not so much VWAP, but their calculations are different. And so that's why it might be different. But if you're on Thinkorswim, first hourly candle, it's going to be 30 minutes into the day. So you can just draw a box around that candle if it helps you see it easier. And this is just nice little price action trick. Here's our box. As long as we are trading within that candle of the first candle of the day, and you guys can see, you guys saw how I just charted this. Very simple price action idea to identify, are we in a range or are we in a trend? So this box is drawn based on the first hourly candle of the day. As long as we're spending time within there, then you know that we are within a range. That is going to be the single simplest way to identify, are we in a range? And you can do it, like I said, that's 30 minutes into the day, you can have that identified. Of course, you don't want to get ahead of yourself. You can see we had some attempted breakdowns, but as a whole, we had nothing convincing that this breakdown was coming right here. And then finally, if you wanted to short this one, I mean, maybe not a lot of potential reward there. But you can see we're leaving the range, we're closing outside of the range. Maybe you put that risk on right there. This is a very simple, very common price action technique to say, are we in a range? So now that we are in a range, that's when we can start really using price action in our favor. And so I'm going to get rid of this box for now. As we all know, it's basically high of day and low of day. So Adrian, good question. I don't. I look at the chart. I can, I'm kind of used to looking at them, so I can, and I know candles, I know things like that, So there's many ways to identify a range. This is just a really, really great way if you struggle to see it. Here is a piece of cake way where you can, drag a box across a candle. It takes you seconds, and now you know. If that range breaks, trade it. If that range doesn't break, don't trade it. Treat it as a range. So I'm going to remove this for now because we know our major range for the day. And now we also know that intraday, there's often going to be small trends, small ranges, things like that, that we also have to identify. And so that is all just price action and it's all just reading the charts. And so as all of you know, I, I, I like to use the charts to learn from. Of course, we get to, of course we get to be hindsight traders. We get to pretend like we're the best of the best, but it's always best to go look at a chart, in my opinion, and apply it to the things that we are learning. And so on something like this, we've identified our range. We have it identified by this candle of the day. So, and we pushed, or I guess this candle of the day, probably, yeah, this candle. So, we pushed a little bit outside of our range. However, now we know what we are kind of planning on being at least the temporary lows. So this is just a really, really great example. Well, no, so Ben, I like to do the first hourly candle because then you're getting, and you can see in the market very often that, 30 minutes, somewhere right around here, very often that 30 minutes before the market open has some nicer movement. You're starting to see an uptick in volume. You're starting to see market on open orders, getting filled or at least getting placed. And so I like to include that. And then because Thinkorswim's hourly candles close on the hour, as you would think they would, um, uh, then you get this price action and you get this price action all in that single candle. So, is it the first hour of the day? Is it the first hour and a half of the day? Is it the first 30 minutes of the day? That's all up for, that's all up for debate. I also do the hour and a half range. That's the one that I put the most faith in, which we're going to get into in just a little bit. And then I did the whole lecture on opening range. So that's why it's on here. We know what this is from my previous lectures. But so we've identified the range. So now at this point, we get to touch on that thing that I was talking about. Don't buy puts at support and don't buy calls at resistance. And price action tells us to do that. From our first candles of the day, we have identified the lows. We now, if you want to be technical, very, early, we've identified this little range right here. So now we buy calls here every time you want, if you want. And these are dollar candles, you're making, these are 25 to 45% returns on a same day, every single one of these candles. Now, if you want to be short, if you prefer trading short, you're crazy. But if you prefer trading short, this is where you get short. You don't short the lows. And so one of the big things with, reading price action and reading charts and trading in the stock market is understanding statistics and statistics in the market. The main ones that I teach and that I think most people should pay attention to is most breakouts fail. Statistically, 80% of breakouts fail. So when you're trading and you are trading against the market, market's coming down and you're trying to get long, these are the places to do it because the risk reward is the best. So again, this is where we get to start trading, we get to start building plans. We've sold down, we've bounced, we've had some consolidation from these candles right here. We know we're looking at range trading. Once we know we're looking at range trading, we have one thing on our mind. Buy calls low, sell them high. If you're into trading short, buy puts on the highs, sell them at the lows. It's of course never that simple, but we know that is our mindset until the market breaks. Don't be the person hunting breakouts. The market trends 20% of the time and it ranges 80% of the time. And maybe it's market trends 30% of the time and ranges 70% of the time. Always assume the breakout will not happen. Or if the breakout does happen, the first one is likely going to fail because statistically speaking, that is much more likely in the market. Oh, is it fair to say reversals are higher probability than breakouts? Yes. I mean, they are, it's 80-20. 80% of breakouts are going to fail. So again, we get to do hindsight trading. We get to do some things, So obviously, big picture in the market, this was one of the main things that I was watching was this is the trend we built from pre-market. I'm drawing this on here because this is price action lecture and this is using things that we know. So we have drawn our trend in the market. We have identified our range in the market. So when we have, and I'm going to go back to the hourly candle because I see I got a DM or a private message on here just to demonstrate it again. So on Thinkorswim, this is the first hourly candle of the day, of the actual trading day. So now we put that on there. Now we have our trend identified, the one that I liked from the pre-market. This is just the one I traded all day. So now we know, okay, range trading mindset. We buy low and sell high and buy low. That's all. That's the only thing we can do in this market until we get confirmations of breakouts. So now we get into the next most important part of price action, in my opinion, and that's reading the candles. And this is not your gravestone doji, hanging man, shooting star, like those are not designed for short time frames. They should not be used on short time frames. The guy who made them up rolls over in his grave every time somebody says gravestone doji on the 5 minute. We are reading, what do the candles actually tell us? Are they bullish candles? Are they bearish candles? What are some things that we can look at in the market and in these candles to identify? So a great example of them is trending candles. This obviously a trending candle, strong bullish candle, closing near its high, basically no wick on the bottom, basically it looks like no wick on the top. Strong trending candle. You don't want to short a strong trending candle. In fact, you want to buy pullbacks after those strong trending candles. Now we start to see here trending candle as well. Pretty bullish candle, getting to be a little bit bigger of a wick on the bottom. So we know that there was some fight there. Also seeing a wick on the top. Well, now we're starting to be cautious. It was nice, strong trending candles. Now we're starting to see like, whoa, we got a big wick on the bottom. We got a big wick on the top. Did it end up somewhat bullish? Yes. But as with all price action, we look left, double top on a range day. This is, and we, of course, we're assuming it's a range day at this point. So here's a beautiful entry for a short trade. Why does price action tell us this is a good one? Double top, first breakout, which we know statistically fails. Most breakouts fail. And the best part about this, and just for reference, I didn't take this trade. I'm not going to pretend that I did. Wish I did. It was a sick one, but I didn't take this trade. But we push up, we double top. What makes this a really, really good entry? How tight our stop is. Well, pre-market high is way up here. So we're a ways from pre-market high. But we're looking at this and we are saying double top on a range day. That's two great things in our favor. If we enter this, we know our stop is very tight. Oh, Norberto in the house. Missed you, bud. Have you back. We know our stop is tight. So it's a range day. We short right here and we have stops above. It's that simple. It's that cut and dry. Rest of the market was also kind of, putting in some double tops, things like that. There's a lot of price action going on market wide. Always best to look at all of it and then come back to your ETFs. But double top here, very tight stop. So minimal risk. And we know range day. So typically how I like to trade ranges is start to analyze the candles. When we short our double top, we see a nice push down, bearish trend candle. Well, all of a sudden this candle is not a bearish trend candle. We've retraced about half of the move. We've come to a support level in the middle. We're looking at the charts. We start to trim. We start to take a lot of our position off here. As you see, when we stop having trend candles, we typically stop trending. So that we stop having trend candles and we consolidate for a little bit. We ultimately end up selling a little bit more, but these candles told us as they are forming that trend is likely slowing down at the very least. So always look for a trend candle, always look for something like that to tell you if you're on the right side of the trade, if you should stay in the trade. So the next candles that I like to look for, I describe them as reversal candles. And what do I mean when I say reversal candle? We have two nice ones that I just spot really quick on the charts. This to me, really nice reversal candle. I'm sure some people would call it a hammer. I'm sure some people, plenty of names for them. I call it a reversal candle because at one point, this candle was ugly. It was bearish. It was full red thing, small wick up here on the top. Very bearish candle. At this point, this candle is now bullish to me because we see that we're seeing two things. There's kind of two candles right here. Same as this one, same as honestly this one. I call them an exhaustion candle or a reversal candle, where we had very high selling. This is where, Ben, we're talking volume a little bit. So increase in volume on the sell down, that for the first time, and you can ignore on my volume this, the blue just means that there was more buying than had been buying. That's all the blue is telling us. But all of a sudden, we had what was a very, very ugly, bearish red candle. This volume bar was full red. All of a sudden, we now have, and we only got, 6, 7 volume candles on the day, but we have above average volume, above average buying on what was a very bearish candle. Price action tells us, hey, this was likely exhaustion, the last push for the bears. And it also, then it also tells us, hey, we might see a reversal coming. So when you see a reversal candle like this, it doesn't it's no guarantee a reversal is coming. It can do what I describe as, I heard somebody describe it one time, and I liked the description. It can eat the tail. You have this big old tail on this candle. It might eat that tail and keep on going down. But we know that we can start to look for a bounce, or if these happen on the upside too, it's going to be the inverse of this. It was a big green candle that is either flipped red or at least turned a small body on the bottom with a big wick on the top. So you can look for catching a bounce. We also know it kind of reclaimed our range, blah blah blah. So now price action tells us, hey, buy the first little dip down. If you can, buy any sort of dip on this next candle. And price action tells us everything we need to know right here. Our entry is around the open of this next candle. Our stop out is below this candle down here. So we know we have, what is that, 50 or 70 cents a risk or so. We know our targets upside are give or take $1.15 above us. So it's not excellent risk reward, but everything is defined by the price action that has already happened. So now you can see we get the nice big bounce up. Well, it instantly sells it down. So at this point, we're just seeing range trading activity. We aren't getting breakouts, no breakdown hasn't held, breakout back up has not held. So now, hopefully you took the scalp here. Maybe you didn't. But now we just watch these candles. And this is what I discussed of there's ranges all day long in the market. So how can a range benefit us? As you can see, we took this nice big breakout right here. Yeah, so one chart, that's the thing. Not a holder's dream. People who hold for more hate this, especially if your entry isn't good. However, well, I just use this candle. This is what I drew the box around. Maybe that's what you would do intraday, maybe not, but we've seen these candles right here. So now we're looking at a little small range inside of a range day. So we buy low anywhere down here and we sell high. That's all we can do here. However, we always want to keep those statistics in mind. As we start trying this, after our little range is formed, we start trying 1, 2, 3, 4 times. Maybe you do get a little bit more cautious buying these. If you're shorting these highs and it's trying, 1, 2, 3, 4, 5 times, maybe you get a little more cautious on the shorts. However, we're going to talk best case scenario and we're going to talk worst case scenario on this. When you have your little range intraday, you're buying low, and we know that we're in a range, and we know that final targets are always highs of the range. So we know buying low gives us the maximum profit potential. If we're shorting here, we're really shorting about halfway up the range of the whole range day. So price action tells us that it's actually safer to be buying the dips than it is shorting the rips. So now, best case scenario, you buy these dips. Maybe you buy this dip or this dip, whatever it is. Well, now you get the move up, and then now we start looking at candles again. These candles were telling us like nice push up, the only wicks on the top. This one pushed up, wick down, and sold. Not a lot of information there. Wick up, all inside this candle. This one, wick on the bottom after being red up to green, but all within this candle. So as long as we're doing this, inside candle, that's all these are. So you can't read into them too much. You can have a relatively strong bull bar, relatively strong bear bar. You don't want to get sucked into them. You want to think of it as a range. Now, best case scenario, you buy this dip. You get the bounce. Obviously, this candle's lucky, but you got your stops above entry. If you've trimmed, you know where we've been rejecting. So obviously, when we push up to here, you're going to trim. So now you have your stops above entry. Well, best case scenario is this. You catch the bullish move right here. You get that breakout. You also have the best entry possible because you were buying low. So now you get the breakout, and now we get to use again the price action to tell us what happens. We've pushed up, we've broken out, we're above the range, we've closed above the range. Now our stops move to here. So this is, I've said it a million times, the most common questions we get, how do I hold trades longer? This is a really, really great example that shows you how to hold a trade longer and where to move your stops to protect your profits and know when to exit. And the price action tells us all of this. Well, we buy low. And again, we get to pretend we're awesome. I didn't catch this trade, I don't think. I think we caught a scalp in here, but that's it. I didn't catch this trade. So we bought low. Now we go up. And like I said, when you hit these EMAs, when you hit VWAP, when you hit, levels, you're trimming in here because price action tells us this is resistance. We haven't been able to get over them. We plan on not getting over them again. We just so happen to get a ripper to the upside. Well, now what I do is I move my stop to the bottom of the breakout candle. So that's what we do. We move the stop to the bottom of the breakout candle, big, strong push up. Again, another big, strong push up. We move our stops to these lows down here. Obviously, this wicks down, and we start to look at this candle as worrisome. We don't like this candle as much after a strong move like this. We don't want to see it start lagging. Price action is telling us, hey, we're pushing up here to our double high. We ratchet up our stops. Somewhere up here at this trend, whatever it is, we bring those stops up again. That's how you manage a trade based on the chart. And so you look for that change in the market where we got a bunch of inside candles, we got wicks on the bottom, we got big wicks on the top. This is telling us nothing. All of a sudden, breakout. And we see it and we catch that move, we follow the move up, and then we're out of the trade. You don't want to be the person, oh, we're breaking the double top looking for it, because statistically, we aren't breaking the double top. So that's how I always analyze the market. Again, we get a nice reversal candle here. Maybe you're looking to be a dip buyer somewhere, any of this wick down, you're looking to be a dip buyer. Stops at these range lows. Yet again, looking for moves to EMAs, moves to trends. You want to trust what the chart is telling you. You don't want to trust your feelings. You don't want to do anything else. Again, we get the nice push up. You likely bump your stop up. This wick starts to get a little bit scary. So you likely ratchet your stop up. You get another nice breakout candle, move your stop up. All of a sudden, we got consolidation real close to the top of the range, close enough for me that I'm not super interested in it. And when you see candles like this is not good for continuation, wicks at trends with indecision. So you likely ratchet your stops up and get stopped out here, probably get mad for half a second and then end up happy anyway. And so those are the types of things that I look for all day long. Again, down here on the downside, main thing I'm going to be looking for, opening range. This is the first hour and a half of the day. That's what this blue line is. Candles holding it. This is reasonable entry, reasonable entry, reasonable entry. All of these are reasonable with stops under this wick because we saw somewhat of a reversal candle, a bunch of attempted reversal candles after it. Then you finally get that push upwards. Of course, I would have been if I was in. I think I did scalp these up to here and got stopped out like right here. But very, very reasonable entry. Now, again, so this is funny because I actually did the opposite of what I'm about to tell you to do, but I also knew what I was doing. So today in the market, we had an interesting thing. We had this trend. It was tested 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 times, give or take. Well, that's pretty far outside of our statistic of, 8 out of 10 breakouts fail. I normally start looking forward at like the fifth time it's going to break out, sixth time, seventh time, eighth time. By the time we're there, I actually tried to catch this little bounce up. We got a few bucks on it, and ultimately sold. But right up here, if I was smart, and we did, I messed this one up too. We'll talk about that trade as well, and what I did there. But if I was smart, we're coming up into this trend. We're coming up into resistance. We're on a range day. You sell high. You short up here. Sure, the breakout's coming, but the risk reward is substantially better here short. because your stops are closes at new highs. That's it. You have less risk short up here than if you buy these longs, then your stop is all for me is going to be below VWAP, below EMIs, below hourly 20. So yeah, and then you look left, you aren't getting much upside for a good amount of downside. That's price action tells you your risk reward. So the shorts here make perfect sense. Well, even though I had said in the voice chat, hey, I'm worried that we're going to get blown, or, I don't want to short it this time because I'm worried I'm going to get blown out. It's tried it so many times. Well, I did end up shorting it here. And then on this candle, basically this candle closed, I shorted this candle. We got that one pop up, and then, and this is what I did. I'm sure others didn't stop out. We caught, you know, the candle closed outside of this trend. That was my stop. I took the stop here. Ultimately, you can see this one pushed up, and then by the close of it, those contracts were well over $200 that I believe that we bought for, $16, and I stopped out at $11. But price action told me it makes way more sense to be short here. Unfortunately, when you got 3 or 4 candles left in the day, if your timing is wrong, this is a 40% stop out. So I take that stop out. Just to show you, price action can be wrong as well. Your opinion can be wrong as well. And price action tells me all of these things as it's happening in reality on the chart. No opinions, no outlandish price targets. We get to just go through the day and trade the chart. So again, this is this is how I would have traded today if I wasn't answering questions all day in voice chat. This would have been the ideal day. But then that's a choppy day. Let's go to a day where we get a nice little trend where things are a little bit different. We can start to look for some other, some different types of movements. Again, I just went to yesterday, and we do the same thing. Or, if you want, you can do the same thing, of course. So yesterday, here's our, and this was on that big old, CPI pop or whatever. Here's our first hourly candle of the day. So when we come into the day, we have our hourly candle set. We get the pop above, reasonable enough entry to actually try to get long up here. You made a couple bucks. If you did stop out, you stopped out on this candle without, oh my God, George. Oh, George, I know. I was ready to jump. And so, maybe you take the scalp, a few bucks to be made here. I mean, that's a buck pop or more, you should definitely, you made a couple bucks there. Worst case scenario, you get stopped here. Well, so Ben, I wish I would have seen a specific one that you were talking about. Let's go back and look at it. So something like this, these ones, we were talking about buying these lows. Your stop is, either this level or down here. So if you're buying these lows, you have 60 cents of risk on the trade. You're looking for ideally moves up to here. A lot of people have heard me say, I don't love the 9 EMA. It's just not very strong, And so you're looking for approximately $1.15 move up, give or take. So it is one risk, two reward. You can of course be trimming at this 9 EMA. I care much more about the hourly 20. So maybe you're risking, 50 cents, 60 cents down for 80 cents up. Not excellent risk reward, but in ranges, you aren't looking for those, one risk, three reward, one risk, four reward. You're looking to capitalize on smaller, more volatile movements. So that's what I try to do. Again, I actually have been telling people I'm just using the one without the ribbon. I've actually kind of taken the 9 EMA off my chart as of recently, just a personal opinion. I just think the 20 is so much better, And so I use the hourly 20, the normal 20, and those would kind of be your targets, is the main thing that you're looking for. And then this is, of course, scalping intraday volatility. That's what you're looking for on those things. And being right or wrong instantly is the other thing you're looking for. Yep. So here's today or yesterday. Different day than today, obviously. But we drew our range on our hourly candles, early in the day. Obviously, you could have bought this dip down here, VWAP, 20 EMA, whatever, maybe you got that move. But we identify our range in that first hour of the day, So maybe you try to play the breakout, no big deal. Well, now we've broken back down into the range. So if you're, trying to trade the price action, trying to trade the chart, what it's telling you, and maybe you shorted this. I wouldn't have shorted that, after that CPI move and strengthened the market right off the open. I'm not the first one jumping in front of it. However, we get some sell candles and we start to get back into this range. And we know if we're in a range, we short highs, you know, we short highs. This is one where obviously you aren't getting great moves, but if you're short here, 592.01, your stop is what, 592.20? So you got about 20 cents of risk on it, just looking for volatile move down. Ideal situation, as I said, first place you really want to start focus on and trimming is about a 50% retrace. I'm not saying you need to pull a fib or anything, but say, okay, here's our range. We've retraced half of it. You would imagine the bulls might want to show up around here to try to defend it. But if you're short here, you have to view all of these as range candles. So we're still, we are in range mindset. So maybe you catch this move down, maybe you don't. Great, whatever it is. Now we start getting down to these lows, and this is where you start to let price action work for you. Bearish candle, obviously increasing volume on the downside. Set at the time was the third largest volume candle of the day. You start to say this might be a little bit of exhaustion. Now you watch these next candles. Not a lot of info. Inside candle, not much info. Finally, attempted breakdown that is bought up. This is to me, and it's not a big one, but it's a nice little sign of this was very bearish candle. Not, it's not like death candle, but it was all red at its lows. At one point, this was like no wick, looked very bearish, ends it green. This can kind of be your sign to say, hey, I might want to look to get into the bounce. So this candle is going to be your entry. You can call it the 50 EMA if you want, but you're more using price action. You're using these candles. You're saying all of these candles are holding the lows, or even holding previous lows earlier in the day. So this is where you want to look for your entry. And then your stop is again defined by the range that we're in. So we're at 589.66. Yeah, you got about 60 cents of risk on you. Again, you're looking for about a halfway move up, gives you about 80 cents of upside, 90 cents of upside, nice little move. But this is one where the range trading can land you in the night and catching the full move to the upside. And I was really happy we had these 2 days in a row so we could talk about it. So again, I'll leave this circle here. So when we get over to it over here, we can have the reference point of where our first hour range was. We know it's right around here. Well, now we start looking at candles and we say, okay, I bought the dip. I got a nice little push candle. This is a bit of a trend candle, a little more wick than I would want on the top, but I bumped my stop up. Now we get another nice push up candle. For me, since I'm really just looking for a scalp off of these range lows, well, now we have seen basically no red. We've retraced about half of that range, the inside the range pullback. So I start to look to trim, but, and I have a very strict rule of if I trim, I move my stop because I was happy enough with those profits to take some of them. So bump the stop up. So then you leave your stop here. You don't get a breakout candle, could be a reversal candle. This doesn't tell you anything. They're holding EMAs, they're holding VWAP, but we're getting little to no information from these other than we have a couple sellers trying to defend the range high. Well, here's our stop. Our stop is a break of this breakdown candle because we know price action tells us if we give up the lows, we likely keep going. Well, we get another push up. We get another push up. You bump your stop up and your stop goes, maybe right to this VWAP. Again, you get another push up, another push up. For me, I'm likely trailing these stops all the way up to here. Well, now you have, you've caught at this point, and this is pretty, this is of course best case scenario, but you've got a couple buck move up. You should obviously be really happy. However, now you have to make the choice. How do I want to trade this? How can I analyze these candles? And the main thing that I'm going to do and that I'm going to watch for is going to be a close back inside. Obviously, this blue line is the opening range. We knew that over here was our previous range shop, kind of where we rejected. Well, now I start to look for the pullback. Me personally in this trade, I get stopped out here. But how can I continue to stay in the trade? Well, we use our opening range. This was the high. This blue one was highest high, highest low of the day. Very the first hour and a half of the day. Very common price action thing, and we break back above it. We consolidate. We consolidate. A couple of inside candles. Now we can start to really think about getting back in this trend. We only had one pullback. Like we had one bearish candle that was instantly met by a bullish candle and a bullish trend candle. Nice little increase in volume even down here. And we look to buy the pullback to the opening range. This is classic breakout retest. Breakout retests are classic price action. Since we know most breakouts don't hold, we can see how many times we tried before. We can start to look for the breakout to hold. We're getting an uptrend. And then, we're running out of time slowly. But one of the final things, when we're looking for trends, a trend is one thing. The market is setting higher highs and higher lows if we're going up. So this is the low. This low is higher than the previous low. This low is actually higher than the previous low. This is all information off the chart that we can use to say, I want to buy the pullback. And now we again do the exact same thing. We get a nice breakout candle. This is a decent one, not big. We bump our stop up. And then at this point, slow grind. You just kind of move your stop up as, any of these like little pullbacks. This is where you start bumping your stop to. This is where you start bumping your stop to. As the market starts going sideways, you can either exit the trade, or if you're in there nice, you can hold on to them. And then obviously we come a little pullback, you get your breakout. If you're still in there, congratulations, you caught a nice slow grind move, but now you move it to here. Again, you break out above resistance, your stop goes to resistance, all based on price action. There's no there's no feelings, there's no nothing. You move your stop because the chart tells you to move your stop, or you trim, or you do these things. Any decision you make while day trading, whether you know it or not, should be based on price action. What is the chart actually telling you? Are we getting more green candles closing at their highs than anything else? Then you look to stay in the trend. You can have other days where, let's see if we can just find one. Shop day. But these are even better candles, if you're in this one long, and so who cares about our entry, whatever it is, um, oh, actually, no, we will do this one because I love it. So, final price action thing we're going to talk today. And then again, we're likely going to have to do a second round of this. Maybe I'll actually get to it next week. If you guys enjoyed it, everybody let me know if you've enjoyed this. It's just technical reading of charts. So something that I love to push for, something that the market loves to do, 3 or 4 pushes. And what do I mean by a push? Some people call it a leg, whatever it is. Market loves to do things in 3 or 4 pushes because it's following those same statistics. 80% of breakouts fail. Algos know that, So when you see your first, you got your first touch. Well, here's your kind of pullback here. Then we pull back again. Well, this is our third touch. We start to look to buy this right here. And why are we getting long here? Because we know most of these breakdowns are going to fail. That's going to be the best thing that you can always think of. So if we take these longs, we took these longs. Nice little pay here. I held one, and a few of us held them through this pullback as well. Either one of these entries, 100% reasonable. I wouldn't have questioned you at all. Now, I sold here. I knew this was a big, we were getting up into 580, broke below 580, first push back up to 580. I follow my rules. I did not believe that we were going to break this right back over it instantly, However, if you were still in there, you do the same thing. Breakout candle, move your stop up. Consolidation, little tiny range, you might want to say. Ranges all over the place, trends all over the place. Next breakout candle, move your stop up. Again, little micro trading range, consolidation, zero info from those candles. This nice candle, not a great candle. This very nice candle. You want to get in, you want to bump that stop up to there because if we're sliding under there, then we likely aren't going to do it. Nice breakout, but wick on the top, so I don't love it. Wick on the bottom, we're seeing that buyers are still there. Finally, breakout candle, closing near its highs. little wick on the bottom. We love that. Bump your stop there. Again, market's pushing, closing near highs, small wicks on the top. You're bumping up. You're bumping up. Maybe this one you bump it up and finally you're stopped out. Of course, this is super easy to go back and look at it. Say we would have done this. As I said, I didn't do it. I'm not trying to pretend I did, but this is how you manage trading on the chart, not your feelings, not your profit and loss, none of that. And so with that, again, I'm sorry, we're going to have to call it here. Thanks everybody for being here. I'm not going to just rush away. We got a few minutes, few minutes for questions. Uh, any questions? Yeah, Norvin, exactly. And just trading the chart, and this prevents you, you get to protect your money and you get to just trade what the chart tells you. So when I said that, Ben, I'm mostly speaking specifically to SPY. You can't just be its support on SPY if you have and buy calls. If Apple, Amazon, Microsoft, Nvidia are all breaking down, you the best way to describe it is um context over everything. If the market is just getting absolutely clobbered and you aren't seeing signs of buying anywhere, then you don't ever want to be the first person long. So that's what I mean by that. When you're trading your apples, when you're trading those individual names, you can start to look to buy the dip at resistance, yeah, or at support rather. You can look to buy that dip, but you need to really look at the chart and see if there's a reason to be buying the dip. Is there a strong level out there? All of those things. You know, Again, if you ask me during market hours, I'll try to show you examples, and explain them a little bit better intraday. And because it's hard. Like when I am in voice chat, if we're buying SPY calls, you're going to hear me list like 10 things in a row for the reason that we're buying SPY calls or we're buying SPY puts or whatever it is. And so I will give you a ton of reasons for it. And uh, that's what I look for. A really nice rule to follow is if you're entering a trade, say you're entering a bullish trade, well, you also need to look at the bearish trade. Is there some reasons to buy puts? Because you have to know if you're going long, somebody else is selling you that call. So what do they see? Why would someone, and of course, a lot of it is market makers have to provide liquidity. So there's always something available. But look at both sides. And if you got 3 reasons to be bullish and 3 reasons to be bearish, you probably don't want to be in the trade. So, it can be, you know, maybe we're breaking above EMAs. We've bounced off of this trend. We have a really nice reversal candle forming right here. Maybe we got Apple and Amazon and Microsoft all bouncing off strong support. You can start to say, okay, I'll look to buy calls. Can you solely depend on price action and volume and remove the EMAs? So, yes, but it's not going to be super easy on a beginner, but yeah, less is more. I do think that EMAs are very helpful. I think you should likely have one or two on your charts. If I had to tell you 2 EMAs to run, I would probably recommend the 20 and the 50 if you just want to go for a couple of the classics and say, as long as we're under that 50, I'm kind of looking to short rips. If we're above the 50, I'm looking to buy dips. You can't get away with it, but I will tell you right now, price action is not something you learn in a day or a week or a month. It is, you sit and you stare at charts for long enough and you start to be like, oh, I've seen this. I know this move. I've seen this move before, and you act on it. So this trend that I have, well, that just so happened to be a pre-market one as well. But this trend that I drew today, I did draw it on the 5 minute. And the reason that I'll draw a lot of my trends on the 5 minute is I'm a stickler for making sure that I want a wick. I want wicks more than I want bodies. And so you can just get that slightly more detailed trend on the 5 minute. However, you'll also see I'm big on trends. I will also draw them on the daily as well, and these are always going to be the more major ones. This was one this morning on tech. I said, God, we're trying to hold over this trend, and ultimately we ended up failing below it, and it ended up being big resistance. Nice, awesome. Well, thank you everybody for the kind words. Thank you for being here. I'm sorry I don't have more time for questions. I just kind of got to run tonight. But FICO, what is FICO? It better not be quantum. What is this penny stock? It has no volume, Arvin. This is way out of your wheelhouse. I would be careful on this one. Oh, it's worth $2,000 a share. What are you doing, Norvin? This is not even. Okay, right on, everybody. I really appreciate you saying that. If you like this lecture, please tag MMA and Tilio. Yeah, there we go, Mara. Thank you. Right on. Let's open over 19. If you really like this, make sure you tag MMA Tilio. Let them know. Thank you all for being here. I think there was about 50 of us, so that is just a great turnout. Uh, you know, Thank you all, and we will catch you all tomorrow. Thanks for being here. And we'll have some Friday fun. Thanks, everybody. Talk to you soon.